Hello everyone, welcome to the market opening bell on Thursday the 4th of September, your 10-minute guide to the stock market. Investors focused on rising US bond yields, with Hong Kong stocks initially rising before falling. The Hang Seng Index opened 164 points higher, peaking at 25,789 with a 293-point gain early on, but later dropped 219 points to a low of 25,276. It closed down 153 points or 0.6% at 25,343. The H-share index fell 58 points or 0.6% to 9,050, while the Hang Seng Tech Index dropped 44 points or 0.8% to 5,683. Total market turnover was 267.6 billion HKD. Southbound funds net bought 5.508 billion HKD in Hong Kong stocks, including Alibaba W 2.489 billion, Xiaomi Group W 698 million, Meituan W 570 million, Yangtze Optical Fiber and Cable 364 million, and CSPC Pharmaceutical 358 million. Net sales included Tencent Holdings 471 million, Hua Hong Semiconductor 405 million, ZTE 203 million, PopMart 194 million, and SMIC 110 million. Southbound funds have net bought Alibaba for 9 consecutive days, totaling 16.828 billion HKD. Technically, although the Hang Seng Index broke above 25,700 again, it failed to hold steady. We maintain that until the index confirms a breakout above 25,700 or a breakdown below 24,800, it remains in a volatile range. Mainland Chinese markets saw losses widen in the afternoon, with the Shanghai Composite and Shenzhen Component indices falling 1.6% and 1.3% respectively in the last 10 minutes before narrowing losses. The Shanghai Composite held the 3,800 level, closing down 44 points or 1.2% at 3,813, the lowest since the 27th of August. The Shenzhen Component fell 81 points or 0.7% to 12,472. The Chinex Index, which plunged 2.85% the previous day, rebounded 27 points or 0.95% to 2,899. The RMB-USD central parity rate dropped 19 points to 7.1108. China's August S&P Services PMI rose to 53 from 52.6, beating market expectations of a decline to 52.5. The S&P Composite PMI increased to 51.9 from 50.8. In Hong Kong, internet healthcare stocks bucked the trend, with Ping & Good Doctor surging over 10%, Ali Health up over 4%, and JD Health up 1.3%. Recent developments show companies like Ping & Good Doctor, Ali Health, JD Health, and WeDoctor heavily investing in AI. AI-driven platforms offer investors greater imagination, while their core businesses, pharmaceutical sales, advertising, and appointment services are low margin. AI could enhance profitability. Policy-wise, AI-assisted diagnostics have been included in the pricing structure by the National Healthcare Security Administration, with the industry believing AI will reshape the cost structure, service scope, and business models of healthcare platforms in the next decade. Despite poor earnings, auto dealership stocks have shown strength recently, puzzling investors. A recent report from the China Automobile Dealers Association reviewed shorter rebate redemption periods. For fixed rebates, 25 brands have redemption periods under 30 days and 15 under 60 days. For non-fixed rebates, 18 brands are under 30 days and 16 under 60 days. On price inversion, selling prices below purchase prices, 8 of the surveyed brands reported minimal issues, while 32 brands faced inversions averaging 16.18%. 2 months ago, 80% of 42 brands' main models had inversions exceeding 20%. In the first half, 52.6% of auto dealers reported losses, 17.5% broke even, and 29.9% were profitable, with price inversion being the main cause of losses. In the US, a judge ruled Google need not sell its Chrome browser, boosting Alphabet's GOG by 9%, lifting the Nasdaq 218 points or 1% to 21,497. The Dow fell up to 315 points but closed down 24 points at 45,271. The S&P 500 rose 32 points or 0.5% to 6,448. The Nasdaq Golden Dragon China Index fell 14 points or 0.2% to 7,939. On earnings, Salesforce CRM reported Q2 adjusted EPS of $2.91, beating estimates of $2.78, with revenue up 10% to $10.24 billion, topping $10.14 billion expected. However, weaker guidance dragged the stock down 4% after hours. Macy's MUS Q2 net profit fell 42% to $87 million, but adjusted EPS of 41 cents beat estimates of 18 cents. Revenue fell 2% to $4.81 billion, exceeding $4.76 billion expected, with shares jumping over 12% pre-market. American Eagle Outfitters Q2 net profit rose slightly to $77.6 million, with EPS of 45 cents beating 21 cents expected. Revenue dipped to $1.28 billion, but beat forecasts, sending shares up over 22% after hours. U.S. job openings in July fell 176,000 to 7.18 million, a September 2024 low, below the 7.4 million expected, reflecting cautious hiring amid evaluations of Trump's trade policies. Gold prices hit a record high, with spot gold up $27 or 0.8% to $3,561. Onzi peaking at $3,578. December gold futures rose $29.7 or 0.8% to $3,622. House says, hitting $3,640 intraday. OPEC Plus may reverse its second round of production cuts, 1.65 million barrels a day, 1.6% of global demand starting October, over a year early. WTI October oil fell $1.62 or 2.5% to $63.97, and Brent November oil dropped $1.54 or 2.2% to $67.6. Our stock pick today is Horizon Robotics 9660. Horizon Robotics primarily focuses on providing advanced driver assistance systems ADAS and high-level autonomous driving solutions for passenger vehicles, holding a leading position in the ADAS market. In the first half of this year, the group maintained the top market share in China for basic and overall ADAS solutions among Chinese automakers, with shares of 45.8% and 32.4% respectively. Additionally, shipments of the vehicle-grade Journey series processing hardware reached 1.98 million units, doubling year over year. In the first half of the year, the group delivered nearly 2 million units of products and solutions, a year-over-year increase of over 100%, driven by the mass production of the Journey 6 series. Shipments of mid to high-end product solutions, such as those supporting high-speed NOA functions, reached 980,000 units, accounting for 49.5% of total shipments, a six-fold increase from the previous year, reflecting significant structural optimization. Benefiting from the large-scale rollout of Journey 6 processing hardware, the average selling price per vehicle significantly increased, driving product and solution revenue to 778 million yuan, a more than threefold year-over-year increase, with the gross margin rising to 45.6%. In the licensing and services segment, revenue reached 738 million yuan, with a robust gross margin of 89.7%. The group achieved revenue of 1.567 billion yuan in the first half, a significant year-over-year increase of 67.6%. Gross profit reached 1.024 billion yuan, up 38.6%, with a comprehensive gross margin of 67.1%. The loss was 5.233 billion yuan, narrowed by 2.6% year-over-year. The group noted that, excluding cloud computing cost for model training, operational efficiency has steadily improved. The group is optimistic about mid to high-end ADAS solutions and is advancing the development of its full-scenario urban ADAS solution, Horizon Superdrive (HSD), which it believes will serve as the technical foundation for future robotaxi autonomous driving. As a result, the group strategically increased R&D spending on cloud services, recording an adjusted operating loss of 1.111 billion yuan. In the first half, Horizon Superdrive (HSD) secured designated cooperation with multiple domestic automakers for over 10 vehicle models. More notably, it is set to debut globally under Chery's Xing2 brand in 2025, marking the group's entry into large-scale commercialization. Recommended buy price, HK $9.3, target price, HK $10.3, stop loss, HK $0.8. I do not hold the aforementioned stock.